Hello, everyone. Thank you for joining us again on Legal Lunch Byte. Today, I'm thrilled to welcome my good friend and client, Eduardo Diaz Rivera, who's the founder of the Alta Fund located in Mexico City. Eduardo, always a pleasure to meet you here in the U.S. or in Mexico or wherever we may be in the world.
Thank you, John, for having me, and pleasure is mine.
So let's start out with an introduction. I know you very well, but please tell everyone your background in finance, what led you into the world of cannabis, and then we'll talk about what Alta Fund is doing.
Sure. So, I'm Eduardo Diaz Rivera. I was born and raised in Mexico City, and I have a major in economics, but my professional career I did in investment banking mostly at UBS and Credit Suisse, mostly out of Mexico City, covering Latin America, and very focused on the structured credit side of things, right? And then while at Credit Suisse around 2017, 2018 or so, I started following the cannabis industry in the U.S. exclusively, and caught my attention because it was a new industry where the underlying it's a commodity, which is a plant, and it's driven by supply and demand, and we thought that the demand was there, while at the same time it's like the biggest and most dynamic economy in the world, which is the U.S. economy, and at least compared to Latin America, the rule of law works, right? So with my structured credit hat on, we wanted to find a way to invest in this very new industry where there was a lot of potential to grow, but we wanted to invest knowing our limitations, in the sense that, we know real estate, we know investment banking, we know credit, but we don't know anything about operating a cannabis business, nor we want to, right? Or we wanted to. So with that in mind, also finding a way to invest that if things went south, how do we preserve capital, right? And I think through Alta is that we found this opportunity, which is in the end what Alta does is provide capital through real estate to regulated cannabis operators in the U.S.
Yeah, it's a great summary. And that you and I met probably around 2019, 2020, when I started working with you in a couple of different states. So let's talk about the states that you've been particularly interested in so far. You have a really interesting bird's eye view because, like you said, you're not investing in the operators, you're investing in the underlying real estate as a means to help fund the operations. So which states were the earliest ones that you looked at?
So the first state that we got into was California, right? It was, back in 2016, they voted to regulate it from a rec standpoint, and then it's the biggest market, and our first investments were there. The first two we actually sold, right? In the end, the tenant that we owned a couple of light industrial properties, mainly warehouses, and our tenant was a distributor in Cali, and unfortunately their business didn't work out. But with the structure that we had in place, I think the thesis got validated in the sense that we were able to keep the properties even though we didn't have a tenant in place, and sell them to a non-cannabis buyer, and we didn't make the base case returns or the expected ones, but under a downside scenario, we got an okay return. So California was our first one. Then in Fund 1, which has closed in December 2023, we have investments in 8 states. We have in Maine, you helped us with that one, in Washington as well. We have in Connecticut, and in Ohio, Pennsylvania, Michigan, and Colorado, right? And even though you mentioned we don't invest in the operators, we do invest. The type of investment or the type of client that we look for is a private company, not necessarily an MSO. We'd rather have them focus on their own market because of how tough it is to get capital, and because of the federal regulations. We believe like stretching out and having multiple operations in different states, it's just not that efficient unless you have a big amount to access to capital, which is not the case in for most operators, right? So that's what we did in Fund 1. We're agnostic as to where we invest in any given state, but what will drive the decision is we'll diligence the regulatory market and try and understand if for a fund like ours, investing in that specific state, given the regulations, makes sense or not. So that's
And
what
are you seeing a lot of differences across those states? And I haven't been involved in a lot of your deals in the Midwest. What are you seeing? Do the deals feel pretty similar as more states have been coming online with cannabis regulations, or do you find that you're running into strange quirks in different states now?
I think one constant, and you see it in any given market, whenever any market opens up, right? There's a lot of noise around it, and suddenly prices in the end, as I said, it's a commodity, right? So prices per pound start very high. There's not a lot of players in the market. A lot of players are just getting their licenses active and putting the infrastructure in place. So when each state, in the beginning of each cycle, when each state opens up, everybody's doing, it's a good business, right? But in the end, what you've seen, especially the Western states and then all the way to the Midwest and the Eastern side of things, is these markets start to consolidate, right? There's more players coming in, prices starts to come down. Then you have the variable of the black market, which is always there. And then other states, for example, Colorado was one of the first markets. So from a tourism standpoint, a lot of people went there, but now all the adjacent states have opened up. So all of those variables you need to take into account. And what we've seen, it's like a copy paste in every state where prices start, very high. People are very bullish and they don't necessarily plan ahead and say, hey, we know that prices are going to come down. We know that taxes are high. We know that our access to capital is very scarce. So we need to plan for that. So when the market consolidates, we're in a good position with a solid capital structure behind us. But unfortunately, that's not the case everywhere. So what we've seen, I would say, a constant, no matter if it's a limited or unlimited license state, I think that's a constant. And then the fact that, taxes in a lot of states are just ridiculously high because of how the regulations were set. And then the other constant is the lack of access to capital for these operators. But to give you one example, in Ohio, we have an investment, relatively small. It's a processing and distribution facility there. And now Ohio was I think it's one of the 6 states with I don't know, 12 million people, right? So it's one of the biggest states in the US. And now they decided to, like fast track recreational activity. And that was a positive, but our investment, our partners who run that facility, they planned ahead. They were in every store and they knew that they weren't vertically integrated. So they started, for example, getting their hands on a lot of product and having, I don't know, up to 2 years of inventory. So because since you could be caught in the middle, since you're not a cultivator, not a retailer, you're just on the processing distribution side of things. So I mentioned that because Ohio moved fast from medicinal to rec. It's a big market. It has Michigan on the side, Pennsylvania, which apparently is going rec, etc. But if you plan ahead and understand those variables and treat it just like any other business, I would say, that's when maybe there's a formula for success.
It's been very interesting when I talk to people about the cannabis industry. I mentioned people like you who come from very experienced professional industry into the cannabis industry, and it's this merger of people like you and then people who have been guerrilla growers for their lives, coming in and meeting in the middle. It's a very interesting set of dynamics that come together, and I'm sure every state is different. What are you seeing as you're looking ahead to the next 3 to 5 years? What states are you particularly keeping an eye on, and then what do you see about the industry generally in the next 3 to 5 years?
So basically, as I mentioned, Fund 1 closed in December 2023. We just set up Fund 2 with the exact same thesis. We just finished our first closing. And in the end, what we're seeing is, you see rescheduling supposed to happen before the year end. Most of the people that we talk to, lawyers, consultants, etc., they believe it's going to happen. But in the end, they would be a great step in the right direction because of sentiment and then because of 280E and the impact it would have on the operators themselves. But then at the same time, It seems to me that it's more of a political driven decision where once it happens, then it's going to stay there for a while. And it could take longer for the industry to actually open up at the federal level. No? So, but with that in mind is, I would say the scarcity of capital will be there. I think the industry is very, very young. I mean, Colorado legalized in 2012, but sales started in 2014. So it's only 10 years. So I think we will continue to see consolidation in every market. I mean, the Western states are still consolidating. I mean, Colorado, California, Oregon, etc. And at some point, they have to find a balance. And at some point, the black market has to lose power, or its punch, so it becomes obsolete. But I think that's going to take time. And then I think we'll start seeing that in the newer states, Ohio, Pennsylvania, which are opening, New Jersey, New York, which is they're taking their time. But in the end, if you ask me next 3-5 years, I think the opportunity is still there, right? I mean, the regulations, maybe a federal reform, banking reform will happen, safer or whatever, but it's going to take time. It's become too political. And my view is if the industry continues to grow, the more it's going to get more political, even so, right? So, for example, take a look at the hemp situation going on, right? I mean, that is, that's been a major issue for regulated cannabis operators, but at the same time, it's under, Farm Bill. I'm no expert, but there's other interests in place there. So I don't know. It's going to be interesting to see how that plays out. But on our end, we stick to our thesis. We want to find solid operators that not only go, as you say, like, hey, I want to buy this product at the highest rate possible, and then we'll see what happens, and then just take money out of the company, but more so, hey, this is a strong business. There's a massive growth opportunity. Let's just do it right, understanding the challenges ahead. And on our end, as Alta, I guess the message is we will be your partner, even though we're only providing capital, but we want to be your partner and help you grow. And the more we get to know your business, the better we're going to be able to, if there's a downside case or a downside situation, we'll be able to discuss it and help you restructure it and come out ahead. Or if things are going well, we'll help you grow. So I think the industry is not going anywhere. It's a tough industry. It's highly regulated. So a lot of people say it's regulated, so that's great. It is great, but then you need to understand the regulations, because if you don't understand them well, then it cannot be so great, right? It can affect you. And it's something indirectly that you don't necessarily control. And then I think the challenges of, finding a good operator with the right thought process of having a robust business with a strong capital structure, and understanding that the cost of capital is tight, and that, hopefully if 280 doesn't happen, right, tell everyone is don't plan for rescheduling. Just operate your business as it is now. And then if it happens, it's all great, So finding those type of partners, clients, it's tough, but I think it has worked so far. So I think the industry's, it's there. We want to continue, growing within it. And that's why we set up Fund 2.
And tell me what the sizes are. What was Fund 1 and what's the size of Fund 2?
So Fund 1, we ended up deploying 70 million across 14 transactions in those 8 states. We have zero debt. It's all equity. It's all private equity from our network of LPs. And Fund 2, the target is to make it larger than 100. But the way we worked, I don't know if you recall, when we first met, we set up the fund, and then we gradually raised equity, which is in line with our pipeline of investment opportunities. So that way, whenever we have capital available, we put it to work faster. So from an investor return perspective, I think it becomes more efficient. And then my view is, again, Fund 2, we just raised the first 20 million. We're deploying it between now and September. And then we don't want to take on any debt. Again, my background is structured credit. I think I know how debt works, and unless you really understand it, it can become troublesome. So for a fund like ours, which is cannabis, at least indirectly, right? The debt that we're able to obtain, it's not necessarily where I would want it to be. So for us, the strategy is to continue raising capital, putting it to work with the driver behind all of this is capital preservation. If the cannabis industry were to disappear, or if things, suddenly turn very south and our portfolio companies stop playing, we want to make sure that we have a robust, our investment is well protected, and that's why real estate is the main driver. But making sure also that we diligence the market, diligence our clients from a financial perspective, and I would say if things work out fine, it's going to be a great investment or a great asset from a portfolio investment perspective. But again, the main driver is if things don't work out as we want them to or as planned, we want to make sure that we have the right structure behind it, so we preserve capital for our capital and for our investors' capital.
Perfect. Thank you, Eduardo. It's been excellent. We're at time, and really appreciate catching up with you. It's always fun to hear your perspective, your expertise, and look forward to catching up with you again soon.
Let's do it anytime. And thank you for having me, guys.
Thank you.